Let's take a look at a big mover here in today's market to the downside. That is Tesla, with shares off just around 5.5%. Today is the first day that Tesla is now included in the S&P. And for that, we want to bring in Tasha Keeney. She's an analyst at ARK Invest. And Tasha, you've been a huge Tesla bull now for quite some time. Tesla is your firm's top holding. Let's just start with, what do you think of the inclusion today now that Tesla is a part of the S&P, and how does that play into your investor thesis?
So ARK Invest has always been an active manager, and we focus entirely on disruptive innovation. So when we think of the inclusion, well, one, indexes are by their nature backward looking. I would say that doesn't change our thesis, which is that Tesla is a leader in autonomous electric vehicles. But in terms of, are we surprised? No. I mean, if you look at the future of the auto industry, it is EVs and it is autonomy. And I don't think that necessarily all the automakers that are around today will survive that transition. But Tesla looks like it will. It's the leader in both of these markets. It should sort of be thought of as an important stock to look at in that segment.
Tasha, Brian Chung here. So what has been interesting is that everyone's been saying the same thing. We knew this was going to happen, so it doesn't change anything today on day one of it being part of that S&P 500 club. But is there anything to be spoken to about the liquidity of the stock now that it's part of that index? Obviously, the S&P 500 is not an ETF, so it's not buying up shares of Tesla per se. But does the increased visibility here, based off of maybe even this morning of trading, show that there's higher volume and liquidity, at least for this stock right now?
Yeah, I think it certainly gets the company more visibility, and that's certainly a possibility. But again, for us, we're focused on the 5-year time horizon. So we see EVs going from 2 million units today to 40 million over the next 5 years. I think autonomous electric taxis should be valued at roughly $2 trillion today in the equity markets, and they're virtually unaccounted for. Those are really the two markets that we're most interested in for Tesla, and it's an exciting time, especially in autonomy. Waymo this year, I would say, just truly commercialized their autonomous taxi service. That is, they let the general public in. So we know that the technology is here and it's possible. And Tesla has a major data advantage compared to any other company in the space. So we'll see how this full self-driving beta goes that they released, and how that rollout plan looks over the next year, let's say. But I think ride hailing could be extremely profitable for this company.
Tasha, when you talk about ride hailing and then, of course, the robo taxi network, what does the timing look like for that, just in terms of your expectations?
Well, that's a great question, because the robotaxi network, there's some uncertainty there. Tesla hasn't pulled this off yet, and it's a really hard technological hurdle to clear. We've learned that from the many companies that have promised to deliver and failed, either on timeline or they're sort of nowhere near the goals that they set out 5 years ago on autonomy. So actually, our latest research is looking at what it would look like if Tesla were to launch a human-driven ride-hail service. So this ride-hail service could have similar profitability characteristics to robotaxi, at least if you look at the early days of both of those markets. And it would be a way to launch a recurring revenue stream, again, that we think is more profitable than the core business. And they could do it now. So I think between those two opportunities, I would be looking for something out of Tesla over the next year. I'd say the 2021, perhaps late 2021 timeframe. But make no mistake, even though this is something that's in the future, Tesla should. You really shouldn't count this against Tesla. I think they're very uniquely positioned in this space. They have vertically integrated insurance. They could do their own financing option to attract drivers to the network. And basically, to set up the blocks for robotaxi, you need the same sort of steps to get to a ride-hailing network. So that is, payments integration, routing algorithms. So this is stuff that they all need to do ahead of robotaxi, anyways. But human-driven ride-hailing is something that they could do today, and then basically transform the business into a robotaxi network as that capability becomes possible to commercialize. And then in that case, we'll see that they could drop the price of ride hailing over time significantly. And then that way, they'd have a huge competitive advantage over anyone else that does not have autonomous capability in the market today.
And Tasha, you laid out quite nicely the argument for why this type of vertical integration might be helpful to Tesla in the near term future. But obviously, the company working through a number of other things as well. When you think about the Cybertruck, obviously everything else that Elon Musk is trying to do between his tweets, which is another issue. But I guess I'm wondering just broadly, what are some of the other storylines that you're watching beyond that possible taxi service in the future? Let's say in the next 2 to 3 years for Tesla.
Absolutely. So, I mean, just look at the core EV business. My colleague Sam Kors has done a lot of great research showing that the cost decline that we see in electric vehicle batteries, and specifically Tesla's batteries, will allow it to price a mass market EV on a cost competitive basis with a gas powered car. So you're sort of seeing the early innings of that with the Cybertruck, that price comparison. But we heard at Battery Day that over the next 3 years, they plan on releasing a $25,000 car. And when Tesla does that, I mean, the opportunity really just runs away with them. And if you think of a traditional automaker, trying to compete with that price, that's pretty difficult to do if you don't have Tesla scale and you haven't even created a performance EV yet. We really haven't sort of seen a comparable EV from competitors. So I think that sort of over the next 3 years, as you said, will be a major hallmark just for Tesla, but the electric vehicle industry in general. I mean, again, we think this is the future of the auto market. And while I think that EVs are getting more attention these days, I don't think that most analysts appreciate that demand inflection point that we see coming with that price parity point. And that's what could get EVs to that $40 million unit sales number that we're predicting in 2025.
All right, Tasha Keeney, analyst at ARK Invest. Thanks so much for joining us today. Again, Tesla shares off just around 5.5%.